I recently had someone reach out to me for a reverse mortgage, and they found me right here on this channel. Life had gotten a little lifey for this older couple, and they found themselves at risk of being forced to sell their home in order to keep afloat. They had seen one of my videos just like this one, and they actually booked a call with me using the link in the description, but then they canceled it the day of our appointment. When I reached out to them to ask them why they canceled, they told me it was because their spouse, the gentleman that booked it, was in her mid-60s, which is old enough for a HECM, but he was in his late 50s, which is too young to be a borrower on an FHA reverse mortgage, which is the HECM. He was scared that if they did the loan now and his spouse happened to die before he turned 62, he'd end up losing the home. Now, if you're worried about the same thing, I've got some really good news for you. You can still do a HECM, a home equity conversion reverse mortgage, and not risk losing the home if the borrowing spouse dies early. How? Through something called an eligible non-borrowing spouse. Let me tell you how it works. Now, real quick, before we jump into this topic, please do me a favor by liking this video and subscribing to my channel. I'm trying to grow so I can reach as many people as possible. My business is built on trying to be as anti-salesy as possible and just being a source of truth in a confusing and sometimes shady industry, so I don't do the cold calling or lead buying that a lot of my competitors do. This channel is one of my main ways of growing my business, so I appreciate all of you guys that watch these videos, and anything you can do to help me grow is greatly appreciated. Now, let's get to the good stuff. To start off, if you want to chat with me about your specific situation, there's a link in the description where you can book a call with me. It's the same link that that gentleman used to book the call I mentioned earlier. Now, the thing this individual was concerned about, losing the home due to one of the borrowers being too young, used to be a real concern. For example, prior to 2014, if you had a reverse mortgage where, let's say, a husband was 70 and a wife was 59, and the husband died, the wife could and often would lose the home. The death of the husband would trigger the loan terms, and the note would become payable and due. But in one of those rare instances where the government really does something great, this all changed with the creation of the eligible non-borrowing spouse. So what is an eligible non-borrowing spouse? This person is almost always younger than 62, which is the minimum age for a HECM loan, legally married to the HECM borrower, not personally obligated on the reverse mortgage loan, protected by FHA rules that allow them to remain in the home after the borrowing spouse dies. It's really that simple. You can do a reverse mortgage even if you're too young, so long as your spouse is old enough, and you don't have to worry about losing the home if your spouse dies. Now, there are a couple of really important rules to keep in mind here if you're considering doing this. First, the eligible non-borrowing spouse must be married to the borrower at the time the loan closes. You cannot marry them after and become an eligible non-borrowing spouse. Two, they must remain married to the borrower until the borrower dies. You cannot divorce or separate and still remain an eligible non-borrowing spouse. Three, the eligible non-borrowing spouse must be listed in the loan documents. This ensures that the lender and HUD and FHA recognize them as an eligible non-borrowing spouse. And finally, they must live in the home as their primary residence and continue to meet FHA's requirements for a HECM loan as long as they live in the home, just like any HECM borrower would have to. Usually, the spouse will also need to establish legal ownership of the home within 90 days of the borrowing spouse's death, assuming this wasn't already the case. Now, this is done through either title, a court order, or some other recognized legal interest. So you can safely get a HECM loan even if one of the spouses isn't old enough. Now, this is really amazing news if, like the viewer I mentioned earlier, you find yourself in a tight financial spot as you enter your retirement years and you don't want to sell your home. So, what are the downsides of this? Why would being an eligible non-borrowing spouse on a home equity conversion mortgage not be a great idea? Great question. Well, If you need the help, you may not have an option. But if you can wait, here's why you may want to wait. Wait until you're both at least 62 years or older. First, the amount of money you can borrow with a HECM is based on the age of the youngest person listed on the loan, not the youngest borrower. That means that having, for example, an eligible non-borrowing spouse that is 56 on the loan will significantly decrease the amount of equity you're able to access through the HECM, at least at the time the loan closes. Why? Well, the protection offered to the youngest spouse isn't technically free. You're not paying out of pocket for it, but FHA essentially says, hey, if we're going to protect your younger spouse after you're gone by allowing them to live in the home and keep it, we need to account for the fact that they may live in the home much, much longer. So the result is a smaller maximum loan amount today in exchange for much stronger survivor protections tomorrow. And this is all done basically through the amount of equity you're allowed to borrow against on the home. This restriction on borrowing amount can actually disqualify couples with younger borrowers, especially if they need to pay off an existing mortgage with the HECM. The younger borrower may reduce that equity borrowing limit enough that they can't even pay off the existing mortgage. The second reason you may want to wait, if you can, is that while the eligible non-borrowing spouse protection will allow the surviving younger spouse to keep the home, they will lose all other benefits of a HECM. If you happen to have a line of credit on the HECM, that goes away with the borrower's death. The surviving spouse doesn't have to repay the balance on the credit line or anything, but they will not be able to borrow any further money against it. And the third reason, kind of tied to the second one, that you might want to wait is that if you have any sort of structured tenure or term plan on your HECM where you actually receive money monthly, like a reverse mortgage payment that goes to you, that also goes away with the borrower's death. So if you've built a budget around that money coming in every month, you're going to have to pivot when that borrower dies because that money will not continue to come. Some people use HECM loans as a tool or a parachute, something they don't plan on needing, but nonetheless a valuable resource in an emergency. But most people get a reverse mortgage because their plans for retirement didn't go off perfectly. So if you're someone who falls into that second group, finding yourself in your later years and a little nervous about the financials, a HECM can literally be a lifesaver sometimes. And it's because these loans can be truly vital to so many Americans that the FHA added these protections for the eligible non-borrowing spouse. Now, you don't have to choose between keeping your house and having enough money to survive, even if you have a younger spouse. You used to have to consider all that in the past, but you don't have to do that anymore because of this. So as always, I hope this video is super helpful, and just don't let having a younger spouse on the loan be something to deter you from having a conversation. Feel free to use that link in the description to book a call with me if you'd like to discuss your personal situation. And until next time, take care.